Good afternoon. I'm Joe Terril from Terril & Company, and today is January 30th, 2011. As we have entered this new year, the Terril & Company outlook is very constructive on stock prices. We expect a 10 to 15% gain in equity prices for the year 2011. We are just as negative on bond prices. Later in the year, we expect higher interest rates. We expect negative rates of returns from bonds as the year goes along. We're negative the U.S. dollar. We think we'll continue to see 3 to 5% declines in the overall value of the U.S. dollar. We are still positive on commodities and gold prices included in commodities, and believe that those prices could be 10 to 15% higher by year end. We look for somewhat of a choppy year, but we feel pretty good about how investments will perform during 2011. Currently, most Standard & Poor's 500 companies have reported earnings. We are pleased with the results. We are pleased with the financial institutions and their results. We see nothing in corporate profits to worry us about a double-dip recession. We still expect 4.5% growth in GNP for the full year 2011. When I mentioned that it would be a choppy year, we have events going on in the Middle East right now, particularly Egypt. If this movement is truly a movement towards greater freedom and greater economic freedom for Egyptian people and people within the Middle East, it will be a positive for the markets. It will only be a short-term interruption in a very good market that we're off to for 2011. But we're going to have to see how these events unfold. If it ends up being one tyranny replacing another, or if it ends up being another country that comes in and uses this opportunity to perhaps start a civil war within the country that may be joined by other Middle East countries, then we could see a terrible market for a while, and we could see much lower prices on investments, and we would see less economic growth. These events tend to happen, and for the moment we're watching daily, as everyone is, and we think this event will take care of itself and it will not interrupt what is otherwise pretty good worldwide economic growth that's going on in 2011. We believe when the year started, and we continue to invest clients' portfolios on the belief that inflation will begin to pick up as the year goes on. There is a positive to the Fed, meaning the Federal Reserve Bank of the United States, creating as much liquidity as they are. It tends to find its way into the investment markets, and we end up with higher prices. But the negative is it will be inflationary. We're on record as commenting that we think the Fed will raise interest rates as early as the middle of summer. We continue to believe this. This will be the surprise for the year 2011, that the Fed does raise interest rates. This may come about because foreign nations force our hand and force us to raise interest rates. This may or may not be a negative for the equity markets. We'll have to wait and see, but we are watching this as the most important event of 2011. What will be the Fed's actions as the year rolls along, and how much inflation, measured by true price increases rather than the CPI, will begin to show itself in the economy. If this begins to turn to more of a negative for the markets, because inflation's coming in hotter than what we expect, and we certainly expect a higher rate than the overall market and most analysts, we would turn negative. But for the moment, as I said when this started, we're constructively positive. Thank you for tuning in today. This is Joe Terril of Terril & Company. Private Wealth Managers, headquartered in St. Louis, Missouri, and we'll be back in 3 to 4 weeks with an updated comment or as needed as world events may or may not dictate. Thank you and have a good day.